Looking for dividend growth stocks with market-beating yields? Want to invest in businesses with sound fundamentals? Does a balance sheet with no long-term debt sound like music to your ears? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, if you want exclusive access to my personal six-figure stock portfolio and alerts on any new investments I make, check out the Patreon link in the description below. I often espouse the benefits of investing in high-quality businesses. When I talk about high quality, I'm referring to fundamentals. Things like top-line growth, bottom-line growth, balance sheet strength, dividend metrics, margins, etc. The balance sheet in particular is what often separates the best from the rest. Let's imagine you have a chance to invest in one of two businesses. They're pretty similar across the board, except one has a ton of debt and the other one has no debt. Which one is the higher quality business in your mind? Of course, it's the business with no debt. When I look at corporate blowups over the course of history, a high debt load is one thing that many of them had in common. But you can't go bankrupt if you don't have any debt. And no long-term debt frees up much of your cash flow for, you guessed it, paying out growing dividends to shareholders. Today, I want to tell you about 3 dividend growth stocks with no long-term debt. Ready? Let's dig in. The first debt-free dividend growth stock I want to highlight is PetMed Express Inc., stock ticker PETS. PetMed Express is an online pet pharmacy with a market cap of $577 million. With its market cap below $1 billion, this stock is well into small cap territory. Now, usually the small caps have more risk attached to them. That's due to the inherent wipeout risk with such a small company. However, PetMed Express mitigates a lot of that wipeout risk by not carrying any long-term debt at all. That's right, this tiny company has no debt, so their income isn't burdened by interest expenses. Instead, they can reinvest back into the business and pay a big growing dividend to shareholders. This company has increased its dividend for the last 13 consecutive years. The 10-year dividend growth rate is 9.4%. If you think that's nice, it's better than it looks. That's because the high single-digit dividend growth is paired with the market-smashing yield of 4.2%. That yield is more than 3 times higher than what the S&P 500 offers. The payout ratio, though, is high at 88.9%, so I suspect that near-term dividend increases will not be like they were in the past, but when you're getting a 4% plus yield, you don't really need a ton of dividend growth to make sense of the investment. This stock is down more than 13% year to date, and the valuation is pretty compelling. Almost every basic valuation metric indicates undervaluation. The price to cash flow ratio of 11.2, for instance, is well below its 5-year average of 16.1. The yield also indicates undervaluation. The stock's 5-year average yield is 3.5%, but the current yield is 70 basis points higher than that. If you're looking for a debt-free, high-yield, small-cap dividend growth stock, this is a very interesting candidate. The second debt-free dividend growth stock is T. Rowe Price Group Inc., stock ticker TROW. T. Rowe Price is an investment management company with a market cap of $51 billion. This is one of the highest quality businesses I've ever looked at, to be honest. It's nearly flawless across the board. One facet of its high quality is, of course, its balance sheet. T. Rowe Price has no long-term debt. So that's simply one less thing to worry about as a shareholder. And that also frees the company up to direct a good chunk of its profit back to shareholders in the form of a growing dividend. T. Rowe Price has increased its dividend for 35 consecutive years. Yep, that makes them a Dividend Aristocrat, which is a title conferred to stocks with 25 or more consecutive years of dividend increases. Basically the creme de la creme of dividend growth stocks. Not only that, this is a debt-free Dividend Aristocrat. The stock's yield of 1.9% isn't all that incredible, but the 10-year dividend growth rate of 12.8% is. Moreover, they most recently increased their dividend by an astounding 20%. And with a payout ratio of 50.6%, you can count on this Dividend Aristocrat to keep pumping out ever higher dividends for years to come. After an impressive 50% run-up this year, the valuation is arguably stretched. I highlighted the stock as an undervalued opportunity back in April when the stock was below $180. It's now over $220. In my video, I estimated intrinsic value to be around $198 per share, so it is perhaps 10% overvalued from where I'm standing, but if there ever was a stock worth paying a premium for, it might be this one. Last but not least, let's have a quick conversation about Williams-Sonoma Inc., stock ticker WSM. Williams-Sonoma is a home products and furnishings retailer with a market cap of $14 billion. Williams-Sonoma is known for its extremely high-quality home furnishings. These furnishings are provided across a range of branded retailers that include Pottery Barn, West Elm, and the eponymous Williams-Sonoma. Well, the business is just as high quality as its furnishings are, thanks in no small part to the fact that they carry no long-term debt whatsoever. The balance sheet is as sparkling clean as linens from West Elm, and that helps to give the company the ability to hand out sizable dividend increases to shareholders. The dividend has been increased for 16 consecutive years. Check this out, their 10-year dividend growth rate is 13.6%. Solid, right? Well, it gets better. They've increased the dividend twice this year, with the most recent increase, announced on August 25th, coming in at 20.3%. Now, one would want to see significant dividend growth, as the stock only yields 1.5%. But with the huge growth and the low payout ratio of 25.7%, this is a very healthy, fast-growing dividend that can compound like crazy. The stock is up 80% year to date, which is amazing, but the company's operational performance justifies a lot of that move. The most recent quarter showed 30.9% year-over-year revenue growth and 80% year-over-year earnings per share growth. Demand for their products is off the charts. I've highlighted this stock repeatedly on the channel, each time with a lot of comments arguing that the stock is overvalued. Well, those commenters have really missed out. The price-to-earnings ratio is now at 14.8, which isn't extreme at all. But that's not because the P price has been weak, it's only because the E earnings has been so strong. I wouldn't say the stock is outright cheap or anything like that, but this is a debt-free gem that any dividend growth investor should be happy to have in their portfolio for the long run. Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about these 3 debt-free dividend growth stocks. Please make sure to subscribe to the channel and ring that notification bell so that you don't miss out on new content. Also, take a look at the description box below for some important links, including the link to my personal stock portfolio. This 6-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I've made my portfolio entirely accessible over a Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high-quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who have been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.